Hello, we are starting chapter 11 this week, and this is dealing with preparing a worksheet for merchandising business. So a lot of the things that we did when we did them for a service business is going to be the same, but there's also going to be some new elements with the merchandising business. There's going to be adjustments again. You are going to have like 6 different adjustments, and these adjustments actually are going to, again, bring the accounts up to date. If you remember, we usually just had supplies account, prepaid insurance, and some of those minor ones like that. But this time we're going to have extra ones like merchandise inventory. So they're going to walk you through the merchandising inventory adjustment using a periodic system and using a perpetual system. So as you go through it, you're going to have the beginning inventory that starts out at the beginning of the period. You're going to then have to look and do your adjusting for what you have at the end, and it's called the ending inventory. The ending inventory is calculated on an inventory sheet, kind of like this. And then you're going to look at your beginning and you're going to say, okay, if I had 19,000 at the beginning, then I'm going to subtract 19,000 and I'm going to then put a debit in of the right amount that I have. It's a 2-step process. So you remove the beginning of balance from merchandise inventory and put it in income summary, and then you add the ending balance as your adjustment to income summary also. Your income statement is going to have your beginning inventory, your net cost of purchases, your cost of goods available for sale, your ending inventory, and then how much it actually costs to have those things. So this slide is actually very important to look at as we are talking about the income statement. As we go on and deal with some of the other things, you're going to notice that your balance sheet assets at the beginning and the end will be different things compared to what's on the income statement. Your beginning inventory will come off that income statement for the balance sheet. Another one that you have is unearned revenue. Now, unearned revenue is things that you pay in advance. So if you pay your car insurance for every 6 months and you pay it ahead, but each month you use up a month, that is an unearned revenue for that business, or for you, that would be an unearned expense. So it's a liability account. It represents the amount collected for rent before renting the space. It is earned as one fulfills a portion of it. So unearned rent is a liability that has a normal credit balance, and it decreases on the debit side. So then it also talks about completing the worksheet. You have actually 2 columns for your trial balance. Then you have your adjustment columns. Enter the totals from the combining the columns together to get in, come up with your adjusted balances, and then you can fill in your income statement and your balance sheet columns. So it shows you examples. They're actually going to assume that you remember some of this from the last time, and so they kind of move really fast through that part of it, because besides doing unearned revenue and merchandise inventory and some of the different accounts that we have, everything else is the same. So it should be kind of that kind of a refresher for you. We also have a rental income. So once you've earned that rental income, it comes out of unearned rent and into the rental income balance. And this is a good example of that. You also have our supplies on hand that we've done before, and our insurance expired that we've done before, and our depreciation expense. Depreciation expense is one that is different because you don't have to figure out that balance. Whatever they give you, that's what it is. So you'll notice that you're adding $50 on in this example. And we have salaries accrued. Salaries accrued is because maybe it causes an increase in your salaries expense or salaries payable. It's something that you haven't actually paid yet, but you will be paying. So that's that one. Here's your worksheet with your adjustments. And then as you fill out the income statement, you can see what that looks like, the different sections, and filling out the balance sheet. So as you will notice, a lot of this is assuming you remember how to do those. I would take the time and really look at the specific adjustments that you have for this that are new, and really read through those and go over that part of it. Otherwise, it should be something that's more of a review for you. Have a great week.